We've got Green Thumb Landscaping designs landscape plans and plants the material for clients. On April 1st, there were 3 jobs in process, job 68, 69, and 70. During April, 2 more jobs were started, jobs 71 and 72. By April 30th, jobs 69, 70, and 72 were completed and sold. The following data was gathered. So let's just duplicate that so that we have it, right? And so we've got job 68. And you know what? I think I can pull it over 69, 70, 71, and 72. Nice. Okay. So now we've got an opening balance for some of these, not for all of them. So we've got an opening balance. This 540, 1230, 990, 0, and 0. So these 3 jobs were already started last period, and this is the direct material, direct labor, and manufacturing overhead that we already have in there. And then it says we have direct materials and direct labor for now, for this month. So we've got 700, 560, 75, 3500, 2750. There we go. And then we have 500, and I'm just copying what's in the question. There we go. Overhead is applied at a rate of 120% of the direct labor cost. So again, they calculated the application rate. But how they calculated it this time is they took the estimated manufacturing overhead and they divided it by the estimated direct labor costs, right? So they divided a dollar by a dollar. And when we do that, we end up with a percentage, which is why we have ended up with an application rate in this case, which is equal to 120% of direct labor costs. Okay, so keep in mind, a dollar value divided by a dollar value is equal to a percentage. Okay, so now we can do the manufacturing overhead because they say the manufacturing overhead is direct labor costs multiplied by 120%. So that's the manufacturing overhead. I can drag this over and it's going to calculate the manufacturing overhead, right? Direct labor costs every single time. There we go. So that tells us what the total cost is going to be. There we go. We've got the total cost for all of these jobs. So prepare job order cost sheets for each job as of April 30th. This is the job order cost sheets, right? We know that this is equal to a dollar value. There we go. So we have the job order cost sheet right here. I'm going to put a box around it so we clearly understand what we're doing. There we go. That's the job order cost sheet. Construct an income statement for this company for the month of April. Well, let's go back. They said by April 30th, jobs 69, 70, and 72 were complete and sold. And what do they say? Jobs are sold at cost plus 40%. So now we know the selling price. So cost plus 40%. And this was on job 69, 70, and 72. So 69, 70, and 72. They were all finished. The other jobs were unfinished. So we can take this and we can multiply it. Remember, 40%. So we're going to multiply it by 140%. That's the selling price. Same with this one right here. And we're going to copy and over here, paste. Okay. So now we know the selling price of each of these jobs. And I'm just going to double check which one. By April 30th, job 69, 70, and 72. Yep. 69, 70, and 72. They were all sold. Oh, I think I missed 2. Calculate the ending balance in work in progress on April 30th and the cost of goods sold. Okay, well, let me just calculate work in progress. Work in progress, also called work in process. Well, we know it's job 68 and job 71. So work in process is equal to $11,340. Now, they also wanted us to calculate the cost of goods sold. Let's just put this down here. So cost of goods sold. Well, we know which jobs were sold. Job number 69, 70, and 72. $11,523. We know the selling prices of all these jobs. I'm going to put dollar signs on there. So we can add these across. And so the total revenue, total sales revenue, is going to be all three of these added together. Total sales revenue is $16,132. So let's create a income statement. So an income statement, we're going to start with the company name, Green Thumb Landscape Design. And it is an income statement. And this is for the month ended April 30th. We're going to start, of course, with sales revenue. And we know what the sales revenue is because we calculated total sales revenue right here. We're going to do less cost of goods sold. Well, we already have that. Also, cost of goods sold is right here. This is going to be equal to gross margin or gross profit. Gross profit. We can use those two terms interchangeably. Subtract cost of goods sold. We've got the $4,609. And then they tell us that selling and administrative expenses for April totaled $3,670. So now we're going to do expenses, right? So this is selling and admin expenses. So we're going to do the negative 3670, and this will be operating income. So the operating income here is equal to $939.20. And I'm just going to create, and I'm going to put a line underneath here. There we go. And we should definitely have a line underneath here. That's what the income statement would look like for the company. So keep in mind what I'm doing here. I'm recognizing which ones are unsold. That's going to be my work in progress at the end of the period. All the ones that are sold, the yellow ones right here, that's going to be my cost of goods sold. And my selling price, remember how we calculate that? If they tell us it's a 40% upcharge, we're going to multiply it by 140% because it's the cost plus 40% of the cost.